Greetings, millionaires and future millionaires. I'm Beene, a 28-year retired lieutenant colonel and former F-16 pilot. In the last 20 years, I side hustled real estate and turned one single-family house into a multi-million-dollar apartment portfolio that included several industry awards along the way. Today is a continuation of our video education and training series to help you become a wiser investor and a better millionaire. Today's topic is very important and certainly timely for what we're doing. It's how to change your business plan or adjust your exit strategy. Well, you can see today that I'm at my house and I'm in lockdown from COVID-19, as you probably are also. And this stay-at-home order has really strangled the Texas business where I operate. And it's also put a clamp on our economy. Just yesterday, I noticed that 3.2 million unemployment applications were filed. Wow, 3.2 million. We went from the great economy 4 weeks ago onto this economy. That market change was phenomenal. 3% unemployment to 30% unemployment in almost 2 weeks. Who would have thought of that? I wouldn't have done that. The market changed overnight. As a wise investor, I need to constantly recognize, what did that do to my investments? What was a good investment may now not be. And what might have been a bad investment might now be something that the market conditions change to make it more attractable. We constantly have to be monitoring those market conditions. Okay, so what does that mean? Why am I talking about that? Because your investments and your apartment real estate investments, which is what my specialty is based on that market change and based on those market conditions. We know that it changed significantly. So how does that change my business plan, my approach to apartment investments, or the apartment complex at 123 Main Street? Does that mean I need to change my business plan or adjust my exit strategy? So today we're going to talk about two things in this short topic, and that is, what is a business plan? What is an exit strategy? Why would you want to change it, and how do you do that? Okay, so your investment plan and your business strategy was developed probably before you even bought or signed the purchase of that property. What is a business plan? Well, for a single family, let's talk about that real briefly. You always hear, I'm a flipper, I'm a wholesaler, I'm a buy and holder, or I lease option, or I do seller financing. Those are common business plans for single family. It doesn't really work that well for multifamily because multifamily is more expensive and more complex. A business plan for multifamily generally leans one or two directions. It's either growth-based strategy or an income-focused strategy. And within those two broad categories, there's four classic strategies: opportunistic, value add, core plus, and core. And each one of those strategies targets a specific type of property. A brand new property would be a core. An older property that may have some dysfunction or displacement to it may be more opportunistic. And so each one of those is a strategy, and that strategy encompasses the business plan. So now I've got this strategy, I've got a business plan, and that business plan should include an exit plan. In other words, I'm going to hold this property for 5 years. At the end of 5 years, I want to increase the value by 2 or 3. And then I'm going to sell it. So as I pitch this to you, or as I recruit investors into this business plan, that's what I'm telling them. We're going to hold it for 5 years. We're going to sell it for twice as much as we bought it for, and this will be our return. That's an example of how a strategy develops the business plan, which drives the exit strategy. But why would I want to change that exit strategy? Why would I want to change my business plan mid-course? Well, generally you don't, and generally that's not advised. However, go back 5 minutes ago and recognize what we were talking about, or look out your window, or try to go to your restaurant today and realize there's been some significant changes in the market. And if those changes impact your business plan, or they impact your strategy in a negative way or in a positive way, it may be time for you to change your exit strategy. So the reasons you would change your strategy, summarizing what I said, was if the market has changed. COVID-19, now no one is going. As an example of this, look at what happened to the shopping malls in 1980. I used to go to the shopping mall all the time, and every store was filled. But the shopping malls in my neighborhood now are almost vacant. That's because the market changed. Look at restaurants. They may be undergoing some type of marketing change where their business strategy and exit plan would change as well. So you definitely want to be aware of the market, and you want to change your exit strategy if market conditions drive that. Furthermore, you may have a financial cliffhanger. Like I said before in the previous example, I bought a property and I'm going to hold it for 5 years, and then I'm going to sell it for 2 times the value. That's my business strategy. But if I have financing in place that has a 6-year balloon, or 6 years the note is due, then I need to be very aware of what I call a financial cliff or financial cliffhanger. I can't go past 6 years because I have a backstop there that I can't exceed. So a reason to change your exit strategy would be, or at least consider, would be that financial cliffhanger, if you will. If you've achieved your financial goals and market change with the properties, that may be a time to change your exit strategy. If the supply and demand balance became unfavorable, in other words, you were in an area that when you started, there wasn't a lot of supply, but a high demand. And then over several years, there were other properties that came in to be more competitive than you. That may be a reason you would consider exiting or altering your exit strategy. Or the most common one probably is the partnership that puts this together begins to disagree. We should turn right. No, we should turn left. And that gets a little bit heated. Oftentimes that's the source of an early exit or changing your exit strategy beyond what was initially designed. What is the most common change in your exit strategy, and how do you do that for apartment complexes? And I would say it's 2 things. First is time. Often we go into a property and say, we're going to hold this property for 3 years and then we're going to sell it for a 2-time return. Or we're going to hold it 5 years. But because of COVID-19 and the corona crisis, sometimes we can't reach our financial goals because the market, like it is now, is very difficult to operate with. And we can't raise rents during the coronavirus like we were expecting to. So therefore our return won't be sufficient, and we want to hold the property until the value returns. So holding time period or duration of investment is one of the most, if not the most, change in your exit strategy. And then the other would probably be price. We were trying to acquire 2 times price, but maybe the market doesn't support that, or maybe we were not able to generate our financial return to support that market price. So time and price are common changes that you need to take into consideration. Let me give you an example. I've got a property up in Denton, and just this week, and I'm speaking in March 2020 is the time frame, is I had a property for sale, and we had identified what the property value was, and that property was showing, I was marketing it to new buyers, and it was a tremendous amount of interest, and we were on track to get our projected sale price. That was on Friday. We had a call for offers, which is when all of the buyers submit their offers, on Monday. That was Monday, a week and a half ago, on the very worst day of the stock market since 1929. And that was when the first news of the corona was impacting the economy, the U.S. economy broke. And it was just a financial free fall. Well, of course, the value of our property from Thursday, the previous week, until Monday dropped 20%. And what I was expecting to get, I didn't get any or as many offers, and those offers were 30 to 20% less in value. So altering my exit strategy. My exit strategy was to sell, and then I realized that this is not the time to sell. So I'm going to have to change my time frame and put this property back on the market when the value returns. And luckily I'm in a position that I can do that in. But I believe that's a wise decision, and I believe that's going to be best for our investor group. So anyway, to summarize this, there is a time for you as an investor to constantly be aware of your business strategy, and then to incorporate that exit point and how you're going to do that and what the expectations are for you to do that. And there very well may be good reason for you to adjust your exit strategy. And hopefully today's topic and discussion will help you make a wise decision on that and help you become a better millionaire. I'm here to help you do those things, and each week I provide a short video on these topics and other topics that I think are relevant to real estate multifamily investing, and then also the current market. Because I believe this coronavirus and current economic situation is going to provide an opportunity to buy good real estate at discount that is once in a decade chance that will allow you to accelerate your net worth years ahead. You can find these videos on our Facebook page, and that's Pilot Legacy Private Equity Group, and you could join that for the latest and best information. I look forward to talking to you again, and before that time, I encourage you and challenge you to think like a millionaire.